Have you ever noticed that the greatest investors rarely agree on which stock to buy, but almost always agree on how to think? That's the real secret. Markets change, technologies evolve, and companies rise and fall. Yet the principles that built lasting wealth have remained surprisingly consistent for decades. If you understand those principles, you're already thinking like the people who have outperformed generations of investors. One lesson stands above the rest. Patience is a competitive advantage. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." That isn't just a clever quote, it's a description of human behavior. Most people want quick gains, but legendary investors know that real wealth usually grows quietly through time. Compounding doesn't look impressive in the beginning. Then, almost suddenly, years of disciplined decisions begin to multiply. Another principle they all respect is risk. Howard Marks often reminds investors that avoiding catastrophic losses matters more than chasing extraordinary returns. Think about it this way. If you lose half your money, you don't need a 50% gain to recover. You need 100%. That's why the best investors spend as much time protecting their capital as they do trying to grow it. Then there's emotional control. Markets are emotional theaters where fear and greed perform every day. The greatest investors understand that your biggest competitor isn't another investor. It's the voice in your own head telling you to buy because everyone else is buying or to sell because everyone else is panicking. Discipline beats emotion more often than intelligence alone. They also believe in simplicity. Peter Lynch focused on businesses he understood. Charlie Munger emphasized staying within your circle of competence. You don't need to know everything. You simply need to recognize what you truly understand and have the humility to ignore the rest. And perhaps the biggest lesson of all is that investing isn't really about predicting the future. It's about preparing for it. Markets will surprise you. Recessions will come. Booms will return. Companies will fail and new leaders will emerge. The investors who thrive aren't those with crystal balls. They're the ones with resilient habits. If there's one idea every legendary investor seems to agree on, it's this. Your mindset is your greatest investment. Build patience, protect against unnecessary risk, master your emotions, and stay committed to learning. The returns from those habits can last a lifetime. If you enjoyed this lesson from legendary investors, subscribe and join us for more timeless insights that can help you become not just a better investor, but a better thinker.